Hello and what's up to you all accounting buffins? Yes, it is accounting time. My name is Abram and welcome to our winter school revision show. I'm not alone today. I thought it was going to be an A-squared kind of a show, but I'm joined by Katleho, one of our top 5 presenters. Katleho, how are you?
Hello everybody out there, my name is Katleho and of course we're going to be together for an entire hour. We'll be doing nothing but accounting.
Do you love money?
I love money, man. Who doesn't love money?
Well, today Ashraf is going to be telling us more about cash flow. Ashraf, how are you?
Well, guys, you can see we got an A team with us today. So that means that you, accounting boffins, have to stay focused and listen to us because we're going to make a difference to that accounting result. Remember, the exams, we are busy with a revision program to prepare you for that big day. Guys, the accounting day.
It's coming.
Okay.
It's coming. The clock is ticking.
That's right.
And what are we doing today?
In today's show, we're focusing on cash flow statements. The ogre out there, the one that creates the most panic amongst grade 12 learners. But guys, don't fear. When?
Ashraf is around.
Aha,
and the A team is around too.
Exactly. So
Of course.
we're focusing on cash flow and ratios and a bit of theory and related questions. So the place to be is
Right here.
right here with us.
Well, and to take part, mindsetters, there are so many things that you need to do, but they're so simple. One, you need to download your notes or get them on our Facebook page, which is?
Our Facebook page is facebook.com/learn extra with an X.
Nice one. And on Twitter, you can also follow us. You know, we're everywhere, Ashraf.
That's good. That's
So
good,
people
that's good.
can follow us on?
It's at Learn Extra on Twitter.
Nice one. But exciting news are we're giving away an Intel tablet, and all you need to do is jump to our Facebook page, go there, and then you get a link that will take you to Curio. On Curio, you use a code which is LEARN. We've got 4 teams that we have selected because we have a Winter School World Cup competition. So there are 4 teams that we have. When you go to Curio, you're going to get those 4 teams. You choose yours. After choosing yours on Curio, you go on Facebook, and then you vote for your team by liking the picture. So those 4 teams are?
Those 4 teams, of course, James, it's an exciting World Cup competition just for you at home. It's winter school, so let's just bring it home and let's just keep in touch with what's happening in Brazil. So there's Costa Rica, there's Colombia, there's Netherlands, and of course there's Brazil. So you go there on our Facebook page, it's facebook.com/learn extra, and then you just click on the link there. It will direct you straight to the competition, and that is where, of course, you're going to be selecting the most team that you think deserves to really be the mindset #1 team. And then we're going to be giving you a beautiful chance to become one of our top winners. And Jensu, of course, what are they winning again?
An Intel tablet, mindsetters.
Yeah.
And besides, if you don't win the Intel tablet, we love you guys. We're too generous. We have airtime that is proudly sponsored by Vodacom, so you might win that airtime. But quickly, Ashraf, what's your team? Out of these 4 teams, you go for Brazil. And you, Katleho?
I go for Costa Rica.
Costa Rica. And I'll go for Netherlands. So I'll keep you guys updated on what's happening. But for now, time for accounting.
Okay, guys, remember, when it comes to the cash flow statement, look at the question and then you ask yourself the question, what does the question require me to do? Right? So we're going to be working in this lesson. We're going to work through the various questions and answers relating to the cash flow and the ratios. Right. We start off with an appetizer. Notice the layout of your exam papers these days, they prepared in such a way that they give you an appetizer, something just to get you into the question. Right. Firstly, we're going to match, they say companies publish annual report, comprises of 5 million parts, match the first column with a description in the second column. So we're going to match column A with column 1 with column 2. The first one has been done for you as an example. For example, if we look at number 1, what does it say? It says there, the income statement. Now, what is the income statement? Remember, also another name for the income statement is my statement of comprehensive income. Now, what is my income statement? Immediately you can see that refers to it reflects the profit and loss of the company. Right, so immediately you can see that one has been done for you. What are we supposed to do next? What is the balance sheet? Right, now, go through your alternates and see which one best suits the description. What are we looking for? the balance sheet obviously reflects the net worth of the company. So you can see, when we talk about the net worth, we're talking about what is the company worth. Okay, remember, another name for the balance sheet is your statement of financial position. So get used to this terminology, because with the CAPS curriculum, certain terminology will also change. And I'm sure you're okay with that. Next one, the cash flow statement. What does the cash flow statement talk about? What are we going to be dealing with today? Let's look at the alternate. It says there, reflects the effect of operating, financial, and investing activities on the cash resources. So clearly you can see that that is what your cash flow statement is all about. It's about investing activities, financing activities, operating activities, dependent on my cash resources. Okay, the director's report. What is a director's report? Who are the directors? Remember, the directors, if you remember our earlier lessons, we alluded to this here. Who are the directors? The directors act as the eyes, the ears, the legs, the brain of a company. Therefore, what do they have to prepare? They have to prepare a director's report. And what is that alternate? Clearly you can see that that one refers to a written or a verbal explanation of the operations of the company during the financial year. So that's your director's report. Okay, now you come to your independent auditor's report. What's that about? Remember, your auditors are independent of the company. They are appointed by shareholders to do what? To express an opinion. An opinion on what? An opinion on the validity of the financial statements. Therefore, we left with B, which says there, reflects. What does it do? It reflects whether or not the shareholders can rely on the financial statements. Voila, done and dusted. You've started, you've got your appetizer in the question, you're feeling good about the question, it boosts your levels of concentration, and that's what it's all about, guys. So make sure that you know your theory to your sections in accounting as well. And definitely, once this is done and dusted, you're on a high, you're on an accounting high, and therefore, guys, you're ready for your question. Okay.
Nice one.
Good, guys?
Interesting indeed, interesting indeed.
Brilliant. So I can expect you guys to do the next cash flow question to the presenter.
No problem.
We can swap places.
We've got
Bring
the
it on,
basics
bring it
now.
on.
Right, let's go, guys. Okay, let's look at the next part of the question. What are we given? In this question here, you can see that you are given extracts from the balance sheet for the year ended the 31st of August. Now, immediately when you are given a balance sheet, what's the first thing that you do? And again, I'm referring you to earlier lessons that we did on the cash flow statement. Watch. Step number 1, draw. AB, you remember this here?
Mm-hmm.
Let's just redo that. Okay? You remember what we called it, guys? Yes, I'm sure you're screaming out there. The love arrow. Why? Because this indicates to you which is the beginning of the financial year and which is the end of your financial year. So get into the habit of doing that on your question paper. Because you do know that if a love arrow is misdirected, it creates havoc in your life, isn't it? By the same token, in accounting, if this arrow is in the wrong direction, your comparisons, guys, will be totally incorrect. Therefore, make sure you identify the beginning of the year and the end of the year. Right, because remember, a balance sheet is the balance sheets would form part of my comparisons when I'm going to extract information that I require. Okay, so I'm given the extract of the balance sheets. I'm also given extracts from the income statement and notes for the current year. I'm making you aware of what the question has in it, so you know exactly how and where to look for information. Right, then you are also given information regarding to shares that were issued and repurchased. Remember, this is important. This is something that we've dealt extensively with you guys, and it's something that you definitely need to know for the exams, right? So an important examination tip, make sure that you know exactly how to deal with the buyback of shares, and you're going to see how it's going to impact when we're doing the cash flow statement. Right, then there were certain changes to your fixed assets, also relevant information, which we're going to be using, and we are then given financial indicators here, right? And in my financial indicators that are given, once again, you can see that was last year and this year. So you know exactly, these were last year's indicators, referring to 2012, and this year's indicators are 2013. Okay, so I've given you a brief overview of the question, and you will notice that in this question as well, you are given an extract from the independent auditor's report, right? We spoke about this earlier on when we did the matching of the two columns, and based on this report here, you are expected to answer certain questions. So you can see it's a mixed bag of questions, a variety of questions, examining all the different components that you can expect in your exams. Right, let's move right into the question. And in question 1, we are expected to calculate the cash flow statement. Now, when we start with the cash flow statement, the item that we're going to calculate here, the cash generated from operations, is a given, right? As you can see, it appears in your answer book, so there's no need to calculate it. However, if you were asked to calculate that figure, guys, you do remember the two terms that we discussed at length in our previous shows. And I keep on referring to these shows because I want you to go back and watch them, because they're available. Am I right, David?
Exactly.
They are, guys. So if you find that you come across something challenging and you want to look it up, by all means, go back, check the information, and you will find this information available to you. You guys are fortunate that you have Learn Extra, because we make a difference to your lives. And it's available to you guys. So refer back to it, go back and get that information. What am I talking about? I'm talking about the French and the German. Okay? That one is the German, Katlejo, and this one is our French. Okay, you recall these two acronyms. They are one, AULIG, basically means when an asset increases in value, we are utilizing funds. When a liability increases in value, we are generating funds. Remember, the cash flow is about the flow of cash in and out of a business. Right, and the second one, the French one, ADGLEDU. What does it mean? When an asset decreases in value, we are generating cash, and when a liability decreases in value, we are utilizing cash. Use these two acronyms in the preparation of your cash flow statement. I promise you, it makes a big difference when it comes to answering the question. Once again, remember something else. Wherever you see the U sign being used, it indicates to you that that figure has to be in a bracket. Once again, look at the formation. There's my bracket, a U. You can see the completion of the U, can't you? So the U tells you that that figure has to appear in a bracket. Right, so moving on to the question, we have to now calculate. What do we have to calculate? We have to calculate the dividends that were paid. The dividends that were paid. Remember the figure you're looking for. What is the amount of the dividend that was paid? Now, the shortcut for dividends paid, you look at two figures. What do you look at? Number one, you look at last year's final and this year's interim. I repeat, you look for last year's final figure and this year's interim figure. Now I'm sure the question you are asking is, where do I find this information? Definitely, you got to look at your balance sheet and income statement and additional information. So you want to know more? The place to be, don't you stray or go away. Stay with the A team, and me, and we're going to show you how we complete all the notes to the cash flow statement.
Exactly. Just a point, Amantitas, since we spoke about the videos that you can watch, remember we have our YouTube channel where you can watch them. It's youtube.com/mindsetlearn. I'll post the link on Facebook. But other than that, during this break, you have a challenge question that is posted. And I'm sure, Ashraf, after the break, you're going to be telling the Mindsetters about the challenge question or later on. But already it's posted on Facebook. We'll see you after the break.
Of course.
Welcome back, Awesome Mindsetters. Now, in case you're wondering what happened to Katlao, he's coming. Ashraf didn't do anything. He didn't deduct him. He's coming later on. But during this break, Mindsetter, I just wanted to tell you that you have an opportunity to fill in a survey where you let us know what you like about Mindset, what you like about our show, and you could stand a chance of winning an awesome Samsung tablet. We're so generous this time. I don't know what's happening, but it's a good thing. Remember what David Timms once said, that you may not always become what you want to be, but you can always become who you want to be. That's what it takes. If you want to become the best accountant or accounting buffin, you can always become that. How's it?
Absolutely right. Guys, remember something else. Let me add to that. It is your attitude that's going to determine your altitude. The attitude towards your work, towards your accounting, will determine how high you will get. And yes, 100% is on the cards. If you put your mind to it, definitely it's on.
Well said.
Okay, thanks.
That's true.
Maybe.
Let's continue.
We move on.
Yep.
Okay, remember we were calculating our dividend paid. So I said, just to refresh your memories, before the break, we were talking about last year's final. So immediately I open my bracket, I go to my information and I say, right, what was I owing last year? Where's my shareholders for dividends? There it is. And I was owing an amount of 620,000. That's what I was owing last year. So obviously, if that's the amount I was owing last year, that's the amount I'm going to be paying this year. So in your answer, immediately you say 620,000. There's your last year's final dividend that will be paid this year. What else are we looking for? We're looking for this year's interim dividend. Do we have that information? Let's check. So based on my information, let's go and see. Here's information, extracts from the income statement and notes for the year ended. What can I see there? I see something important. Voila! That's the figure that I'm looking for. What is that? The interim dividend that has been paid. Remember, with your dividends paid, you're looking for the amount of moolah that flowed out of the company that we paid. So there's my second component, namely an amount of 770,000. Okay, so include the 770,000 in your bracket, right? And therefore you can see that you've got now your dividend paid. What are we now going to do? We're going to add those two components together, and it's the 620,000. 620,000. Okay.
Are you struggling there?
It's our calculator seems to be playing up, but I'm sure we can get it. There, we got it. 620,000. Do I have to add myself, my director?
I think I can help you.
Please do.
I think so. We need to turn this off.
Okay, thank you. You're a star.
Welcome.
620,000. Technology, guys. We need to know technology. Thank you, Amy. 620,000 plus 770,000 will give me a total of 1,390,000. Immediately I know 1,390,000 is the value of my dividend that has been paid. So once again, guys, the shortcut, last year's final plus this year's interim. Okay, sometimes it becomes necessary to do more information, and then you would reconstruct a ledger account, But the following one, where we're calculating now our income tax that's paid. Okay, now when we do that, when we calculate our income tax that has been paid, watch what I'm going to do. I'm going to open up a T account. And the name of this T account is SARS Income Tax. Watch the procedure. Step number 1, look for your opening balance. What is your balance at the beginning of the year? So, go to your information and see what it tells you there. Right. There's my SARS income tax. Okay? Now, obviously, if I ask you a question, what type of an account is SARS income tax? The answer is not as easy as saying it is an asset or a liability. Your answer is, or your answer should be, it depends. It depends on what? On the type of balance that appears in that account. Therefore, in this particular case, SARS income tax at the beginning of the year, watch, appearing under current liabilities. So telling me that it is a liability at the beginning of the year. And what's the value of my liability? 72,000. Okay, so therefore, I say SARS income tax, 72,000 is my liability on the credit side of the account to indicate that that's my opening balance. Right, step number 2. What do I now look for? I now look for my closing balance. Grade 12's, a cash flow statement is about procedure. When you can master the procedure, I promise you, your cash flow statement will be a piece of cake. Chocolate cake. So you know my favorite.
Yeah.
Okay, all right. Okay, let's see where we get this information from. Going to my balance sheet once again, and notice now that something has changed. What has changed? My SARS income tax, at the end of the year, if I look at my liabilities section, I see it's 0. Okay? That means it is not a liability at the end of the year. So obviously, if it's not a liability, my mind tells me, okay, not there, go somewhere else and look for it. Where do I look for it? Under my assets, under my current assets, voila, SARS income tax. How much? 65,000. Do you recall what I said earlier on? What type of an account is SARS income tax? Grade 12s? Yes, you should be shouting out. It depends on the balance. So at the beginning of the year, it was a liability of 72,000, as you can see it. And now, at the end of the year, it is an asset of 65,000 rand, indicating to you that SARS owes us money, 65,000 rand. Okay, let's put that information where it belongs. 65,000 rand. Now you must be asking yourself, why is Ashraf putting that balance there? Because very simply, guys, if that's the total, then this balance will be brought down as a debit balance for the next financial period. So clearly you can see, for it to be a balance brought down, it had to be a balance carried down. Got it? Brilliant. What's my third component that I look for? What's the value of my income tax? What was my expense for this financial year? Let's find it. What am I told? I'm told that my net profit before tax was 2,600,000. So there it is, 2,600,000 net profit before tax. And I'm given my net profit after tax of 1,820,000. But my tax is not given to me. But surely, if I know the net profit before tax and I know my net profit after tax, then I can calculate a missing figure, can't I? Yes, you're absolutely right. It's my 2,600,000. Let's get to the 2,600,000. 2,600,000, 1, 2, 3. My net profit before tax minus 1,820,000. 1,820,000. Have I got all my zeros there? 1,820,000, correct? To give me a figure of 780,000. 780,000. What is the 780,000? Obviously, guys, that is the expense. Which expense? The expense income tax for the financial year. 780,000. Okay, let's go and include that where we need to put it. 780,000. What was this year? My income tax for the year. So therefore, you can clearly see that there's my SARS income tax account. What am I looking for? What is it that I need? I need my bank figure. What was the amount of taxation that has been paid? And guys, very simple. Watch. All my figures are appearing on one side. It means that I have to add all this information. So how do I show this here? This is what I do. Watch. 72,000 plus 780,000 plus 65,000. Watch. I'm showing the calculation. I'm showing my calculation. That is what will appear. I've just done it there because obviously it's going to be difficult to fit it in that space, but that's where you will show your calculation. In here, whatever I've got here at the bottom is what you're going to put alongside the income tax. And the reason for me adding it, you can clearly see, is because all of it appears on one side of the account, meaning I'm adding these components together. Let's do that. It's the 72,000. We've already got the 780,000, so let's just add to it 72,000 plus my 65,000, and my answer is 917,000. So the answer here, guys, 917,000. Watch. The figure appears in a bracket to indicate that that's the value of income tax that has been paid. Just to show you one more thing, that that's the figure. The 917,000. That's correct. I just wanted to verify the figure. 917,000 is the value of the money that had left the company as a result of the taxation that we have paid. Got it? Okay. So in other words, whenever you are challenged with a question, what do? Open up your T accounts. Because when you open up your T accounts, clearly it gives you an indication of what you are looking for. Right, let's move on with the question. What else do we need? Under our investing activities, we've got to work out the value of tangible assets purchased. We've got to work out our proceeds of our disposal. And we have to look at our investments. Let's start with the investment. Right, now, based on my information, let's see what happened to the investment. There's my investment. Okay, and from my investment, I can see that what happened. It was, remember the arrow once again, beginning of the year, end of the year. My investment was 600,000, and my investment is now decreased to 250,000 here. Okay, so you had an investment of 600,000. It's now decreased to 250,000. So 600,000, that's 600,000 minus 250,000 is equal to 350,000. Clearly you can see that your fixed asset has decreased, and asset has decreased in value. What is it? German or French? French, et gledu, asset decreasing in value. We generated cash. How much did we generate? We generated an amount of 350,000. Okay, so this means that under my investments, there has been an inflow of 350,000. Why? The investment has obviously matured. And when investment matures, it means that the fixed deposit has decreased, We had a flow of money into the company. How much did we receive? The investment of 350,000. Guys, we're getting into the cash flow. We're explaining it to you. Take a quick break, chill, and come back.
Right. Before we take that break, I just want to make a school update on our winter school soccer competition, World Cup competition.
Okay.
You've got a good memory, right, Ashraf?
Yes, I do.
It's very good.
I hope so.
What's your team?
Brazil.
And what's Katlo's team?
Costa Rica.
And what's my team?
You went for the Netherlands.
Awesome. Let me give you a score update. For Brazil, you have 13 likes. Colombia has 4 likes. And Katleo, Costa Rica has 2 likes. And guess what I have? 33 likes.
Okay,
so I'm leading. Netherlands is leading. Mindsetters, if you have voted for Netherlands, let's keep going up, Mindsetters, you know. But if you have those other teams, make sure that you vote for your team. Share the picture and let your friends vote for your favorite team. And you could stand a chance of winning an Intel tablet. See you after the break.
Welcome back, Mindsetters. It's still our winter school edition, and I'm not alone. Of course, most of you have been, or more or less, you could have been wondering, where did this guy disappear to? I made sure that I go outside to go learn those acronyms that Ashraf gave us earlier. And trust me, if you use them, I'm sure you can manage your finances so well. And, you know, looking at our competition here, I'm so sad that Costa Rica is not in the lead. But then I see Jensu's team, Abram's team, is the one that is in the lead, and then followed by Ashraf's team. But then the competition is still on. We are here for an entire hour, and we're going to be making sure that towards the end of the day, we will be announcing who is going to be walking away with that grand prize. So keep voting. I see you on Facebook, and we're interacting with you. Of course, it's facebook.com/Learn Extra. And on Twitter, you can catch us, of course, it's @LearnExtra. And for our latest notes or anything that you might need, you can make sure that you go to our Facebook, and we'll give you a link to direct you. That will direct you, of course, to our website. Ashraf, I'm back.
Thank you, Katlego. And you know your acronyms?
I know my acronyms.
First one?
The first one is AULIG, and the second one is
EDGLADU.
That is the one that I was
That's the French one, right?
That's a French one.
So you know the German one
and
you know the French one, because both those teams are also in the last round of the World Cup.
Yeah.
So keep it going, guys. Right.
That's just the way it is.
Guys, the next thing that we're going to be doing is we're now going to calculate the fixed assets that we purchased. And when it comes to the fixed assets that we purchased, in this particular question, it's quite straightforward. Why? Because you are told. What are we told? Let's look at the information. We are told that, let's just get the information. There's our extracts. Okay, that's what we have there. We need the other information. There it is. It's avoiding us. It must be here. There must be information regarding our fixed assets. Let's just see. Maybe gone down. There we go. Changes to fixed assets. What happened? New vehicles and equipment were bought during the year for an amount of how much? 880,000. So already you know that that is the value of your tangible assets that have been purchased. Okay, so therefore, fixed assets purchased, immediately the answer is 880,000. And remember, a bracket. Why? Because an asset increasing in value, you see here, an asset increasing in value means that you utilized cash. And when you're utilizing the cash, it means that there's an outflow of funds. Okay, the next thing that we need to look at is the proceed of my disposal. In other words, what are we saying? When we're talking about the proceeds, we mean how much did we sell the asset for? For example, we are told, what are we told here? We are told that an unused vehicle or vehicles were sold at book value. Now, that brings me to another very pertinent point. Whenever you're working with the cash flow statement, right, and you are dealing with asset disposal, keep this in mind, that we will always dispose of the asset at carrying value or at book value. In other words, no profit or loss on sale of asset. But grade 12s, that's only applicable to the section on cash flow statements. Anywhere else in the curriculum, it's the normal asset disposal where you would be selling for more than the book value or less than the book value. But in the component on the cash flow section, we will always be selling at carrying value. No profit, no loss. So please understand this, right? It's important that you take cognizance of this here, because you are told unused vehicles were sold at book value during the year. Right, now let's go back to our information. And we want to know now, what are we dealing with? We're dealing with our fixed assets. Right, again, important. Look at the proceed here. How do I go about determining the proceed of my disposal? Watch this. Watch this calculation that I'm going to do for you here. You start off with your fixed asset account, and remember that everything is at carrying value. Why do I say that? Because if I look at my information, it says here fixed assets. 2 figures are given to me. No mention is made about the accumulated depreciation, neither is the cost price mentioned. Therefore, we know that this is at carrying value. Right, once we've ascertained that, step number 1, take your opening balance. What's my opening balance? 12,357,000. Okay, let's slot it in. 12,357,000 is my balance at the beginning of my financial period. What did we say about cash flow, guys? To recall, remember, it's about procedure. Where do I put what? I've got my opening balance. Step number 2, my closing balance. What is my closing balance for my fixed asset? 12,138,000. Here it is. 12,138,000. So therefore, 12,138,000 is my closing balance. So I've slotted in my opening balance and I've slotted in my closing balance. Okay, what else do I know? What else do I know about fixed assets? What information have I already included? Here, watch the space here. I know that I purchased for 880,000. You recall? We filled that into our cash flow statement already. So my assets were purchased to the value of 880,000. What am I looking for? What's my goal? Where's my target? What do I want? I want to know what was the value of the tangible assets, in other words, the vehicles, the unused vehicles that were sold. I'm looking at the proceeds figure. Okay, and what else do I need in this entire calculation? I need to find my depreciation. What was my depreciation for the current year? Let's see if I have that information. And yes, there it appears. Depreciation for the year, 1,010,000. So let's slot the depreciation in 1,010,000. So what do I have? Let's go through those figures once again. This note is important because in this note, we're calculating the proceeds of my disposal. How much did I sell the fixed asset for? Right, here goes. Step number 1. Opening balance, done. Closing balance, done. From where am I getting the information? From my balance sheet. Let's see where it is, so you know what we're talking about. There goes. Voila, opening balance, closing balance. Okay. Opening balance and my closing balance. Step number 2, bring in the purchase if you know about it. Yes, we knew, we were told, the question told us that we bought assets to the value of 880,000. There's the amount that we purchased, the value of assets that we purchased. Next one, bring in your depreciation. Where are you going to get the information from? The information is coming from your income statement or relevant information. Let's see. Does it appear there? Yes, it does. 1,010,000 rand. However, not in this question, but in another question, if you get the famous question mark, what happens? Katlecho? Panic mode.
That's panic mode.
No, guys, no, chill, relax. If that is an unknown figure, all that it means is you now have to go and calculate your depreciation.
Indeed.
Got it? So don't stress. Just keep a cool head. Make sure that you have BMT. I love my acronyms, eh? BMT, big match temperament. Because once you lose your temperament, you make mistakes in accounting. You become flustered. You just cause it. Guys, keep cool. If something is a challenge, there's a calculation involved. Follow, work it out, and make sure you understand it. Right. In this particular case, was not necessary because we have our depreciation figure of 1,010,000 rand. Slotted into my account, there goes. I've got all the components that I require in order to calculate my proceed of my disposal. Let's do that. So we start off by saying we have 12,357,000, 12,357,000. You can see what I'm doing. I'm adding the debit side of the account. 12,357,000 plus the 880,000 that I purchased for. It's equal to that minus the 12,138,000. You can see what I'm talking about. This figure here, the 12,138,000, right, is equal to that minus your 1,010,000. Okay, and there you have it. 89,000. What is the 89,000? That 89,000, watch here, the 89,000, that's the proceeds of my disposal. In other words, what money did I have as an inflow of funds? What did I sell the vehicle for? The vehicle was sold for an amount of 89,000 rand. And that's the figure that we're going to slot into our cash flow statement. 89,000 rand is the proceeds of my disposal. Remember, it's money flowing in, so it is a positive, no bracket around it. Okay, so this is how you make sure that you have to have all the relevant information with you when you are calculating things that you require. We're done with our investing activities. All that you do is you add them up and you put the net amount as a total for cash effects of investing activities. Now we come to our financing activities. Okay, under financing activities, there are 3 items that we're going to be looking at. What are those 3 items? Number 1, you're going to look at, was there an inflow of funds as a result of shares that were sold? So my proceeds of selling of shares, 1. Number 2, you're going to look at whether there was a buyback of shares. That means, did the company buy back shares from the shareholders? Second component. And step number 3, you're going to look at your loans. Remember, with your loans, there are 2 possibilities. There are 2 options. What are they? Either we're going to receive more loans or we're going to repay a particular loan. So keep that in mind. But that's just to whet your appetite. Look at the question and you will see how interesting this particular question is. And if you want to see, and if you want an explanation on what we're going to be doing, the place to be, guys, is Learn Extra Live.
Indeed. Of course, thank you very much, Ashraf. You are still tuned in to Learn Extra Live. This is, of course, our winter school edition. This is, of course, our winter school edition. And of course, we're going to be together up until 12 o'clock where we're doing nothing but accounting. Ashraf, it's been a truly, indeed, insightful, experience to just work with you. Those acronyms, where do they come from?
You just got to make yourself aware that this is what you're looking for. And if you concentrate on those, it just makes your task. It's easy to learn. Sometimes when you learn a word, if I had to say assets increase, you tend to forget that. But if you just make up a word from it and you remember it that way, I promise you, it makes your task very easy in the exams.
It will indeed make your task very easy at home there, Mindsetter. Don't forget, we have a survey competition that we are running. We would like to hear or to get your feedback from you about the show, anything. You can ask us about Ashraf's acronyms, and we'll be sure to answer your questions. And of course, you're still tuned into the Winter School edition, and we're going for an ad break. When we come back, I'll be giving you those results of the votes that trickling in. I see people voting for Netherlands, and I see Costa Rica, also picking up, and Brazil is also, coming up. I'm Katleho, and I'm still with you. We'll see each other after the break.
Welcome back, Accounting Buffins. Just a quick reminder that if you don't get to win the Intel tablet, we have airtime that is proudly sponsored by Vodacom. So guys, keep your eyes glued to your screen, and also on the page, check out what's happening and what your friends are voting for. But for now, Ashraf, we have a question.
Go for it, baby.
Olani X Ngomezulu says, so what if the opening balance for tax was not under liabilities, it was under assets, and the closing balance was under liabilities? Will you still treat the SARS income tax account the same way as you did?
No, definitely not, guys. Watch this here. This will give you a brilliant example. For example, I'm just going to do it here on the side, just to draw your attention. So, if your opening balance is a debit balance, then surely you would have the opening balance on the debit side. Make sense? And if your closing balance is a credit balance, then obviously, if it's going to be a credit balance, then this is what's going to happen. This is your balance at the end, which you're going to bring down. So you can see it changes. In our example that we did, my opening balance was a credit balance, therefore on the credit side. But if the example has, or if a question has the opening balance as a debit balance, then that's where you would insert it. Yes, your income tax would always appear here, okay? And based on that, you can now see, depending on where the opening and closing balances are, that's where you will place it.
Nice one.
Okay,
cool.
No more questions? Can we carry on with the lesson?
Let's carry on. As they come, I'll let you know.
Perfect. Right, guys. Under my effects of financing activities, what am I looking for? Remember what we said before the break? We said we're looking at the proceeds of my disposal. That means proceeds of disposal of shares. Remember, if we have sold shares. We're also looking at, one is the proceed, how many shares did we sell and how much did we sell them for? Number two, we're looking at the buyback. Did we buy back any shares and how much did we pay for them, for those shares? And the third component that we're looking at are the loans. Right, let's look at the loans first. Let's go to my information and see what we have regarding our loans. Okay, now if I look at my loan, there's my comparison. I had a loan at the beginning of the year to the value of 5,400,000. I now have a loan of 3 million rand. Clearly you can see that the loan has decreased, okay, from 5,400,000 to 3 million, or 3 bars. You know, they use, these days we don't talk about millions, we talk about bars. Right? So 3 bars, guys, 3 million rand. So now, the loan has decreased. Let's go to our acronym. What do we know in our acronym? When a liability decreases, remember that one? Edgledu. What does it mean? When a liability decreases, we are utilizing cash. So obviously we utilize cash. How much did we utilize? Let's do the calculation. So we can see here that we had a loan of 5,400,000, 5,400,000, okay, minus the 3 million rand, and you can see that your loan decreased by 2.4 million, 2,400,000. In other words, what does this mean? It means that we had repaid a loan to the value of 2,400,000. Repaid, remember the U? That figure has to be in a bracket. Okay, now the proceeds of the shares. Very, very important. Let's look at the information that we have regarding our shares. Shares were issued and repurchased. So immediately the question is telling you, yes, you issued shares. And two, yes, you also repurchased shares. Right. So this is critical. Please make sure that I have your mind, your body, and your soul with me. Pay attention. This is important because it shows you how the buyback of shares is applicable with a cash flow question. Right, what's my information? There were 1 million ordinary shares were in issue at the end of the previous financial year, right, on the 31st of August 2012. So my opening balance is represented by 1 million ordinary shares. Right, what else do I know? I'm told that 400,000 ordinary shares were issued. When? On the 1st of September 2012. Right? And I'm also told that 120,000 ordinary shares were repurchased on the 28th of February from the estate of a shareholder who had died. The shares were repurchased at 2.60 rand above the average issue price. My appeal to you, grade 12s, is do not look for fancy other accounts. You deal with ordinary share capital, you deal with your retained income, and you deal with your appropriation account. And that's exactly what I'm going to do. I'm going to show you how these three accounts are going to interact with one another, right? And how we're going to use information from these three accounts to complete what we require. Right, so ordinary share capital, I said, we're going to be using. Number two, we're going to look at our retained income account. And number three, we're going to look at our appropriation account. Right, so let's start off with my ordinary share capital. What information do I have? There's my share capital. My share capital has an opening balance of 6,360,000. So therefore, 6,360,000 is my opening balance in my ordinary share capital account. Right? Watch how I'm laying out the information for you. Look at the method that I'm using in order to find out. I'm looking for two figures. I'm looking for the value of the shares that were sold, the proceeds, and I'm looking for the value of the shares that were repurchased, the buyback of the shares. Okay. So, we've got our opening balance of our shares, which was 6,360,000. Closing balance, 8,960,000. Watch, 8,960,000 is my closing balance. 8,960,000 is my closing balance. So I've got my opening balance, I've got my closing balance. Okay, what else do I know about the shares? I'm told that 400,000 ordinary shares were issued. That means I sold more shares. So definitely my share capital account must increase by that value. But unfortunately, I don't have an amount. So that means I need now to calculate that figure. Okay, and I'm told that I repurchased shares. 120,000 shares were repurchased on the 28th of February at an amount of 260 above the average price. So we sold it for more than the average price. Okay, so now let's take that information again regarding our retained income. Let's see what information we have. Retained income, you have an opening balance of 2,235,000. So therefore, 2,235,000, 2,235,000 as my opening balance in my retained income. And I need a closing balance for my retained income as well. And the closing balance for my retained income is 2,051,400. 2,051,400. So in other words, you can see all that I'm basically doing, I'm slotting in balances that are given to me, right? So ordinary share capital, I've got my opening and closing balances. Retained income, I've got my opening and my closing balance. Now watch this here. I now look at my appropriation account, and I know in my appropriation account, I need to have income tax, I need to have my ordinary share dividend, and I've got my profit and loss figure, and I have my retained income figure at the end of the year. So in other words, I can now complete this appropriation account. Let me do that. What was my income tax figure? Remember that we had already calculated the income tax figure. And let's get to that account so we don't have to redo the entire calculation. There's my income tax figure, which was calculated at 780,000. If you recall, when we did the SARS income tax account, we calculated our income tax to be 780,000. That was the tax for this financial year. Okay, so therefore, if we look at this year now, we can see that the income tax figure is 780,000. Right? Then I also know that I can calculate my profit and loss figure, can't I? Why? Because that information is given to me. Where is that information given to me? It's given to me if I look at my income statement. I want my net profit before taxation, right? And my net profit before taxation is a figure of 2,600,000. Therefore, going into my 2,600,000 would be in my profit and loss account 2,600,000. Okay, so I've got my profit and loss figure, net profit before taxation. I've got my income tax figure, right? I also have my retained income at the end of the year, don't I? Let's look at it. There's my retained income at the end of the year, 2,051,400. So therefore, if that is my figure, 2,051,400, I can now go and calculate my ordinary share dividend figure. So what I'm showing you is looking at this information here, you will notice the link between these accounts here, and that is important. Always be able to see that yes, information from my appropriation account is going to impact on my retained income account. Information on my retained income account will also be related to the buyback of my shares. Now let's go back to our shares. What do we know? We know that the closing value of my shares is 8,960,000, right? How many shares is that represented by? Let's look at the question. We had 1 million shares at the beginning of the year, right? We sold a further 400,000 shares, and we repurchased 120,000 shares. Let's do that. So we have 1 million shares, right? Then we sold a further 400, so plus 400, 1, 2, 3, minus 120,000. Okay, so we are therefore left, grade 12s, with 1,280,000 shares. That's a physical number of shares. Once again, a million tells you what we had, number of shares. We sold 400,000 and we bought back 120,000. What number of shares are we left with? 1,280,000. Now, the 1,280,000 is the secret. You want to know the secret? Unfortunately, you have to stay with us. Because after the break, we'll give you the secret.
Yeah, I like that. Hey, you're full of surprises, hey, Ashraf. You never see,
Never a dull moment.
No, no. Well, Mensitors, I like that. During the break, you have the quiz to fill in with your favorite team, and then go to Facebook, like it, vote for it, and then we'll see if you get to win the Intel tablet or not. But otherwise, if you don't, we have the Vodacom airtime. We love giving away stuff. Mensitors, we'll see you after the break.
Welcome back, Mindsetters. You're still tuned into our our winter edition. And of course, I'm still Kat, and this is
But
AB.
you're right.
Yeah, this is weekend. It's
coming.
Friday.
It's weekend winter revision.
And one can say, thank God it's Friday.
TGIF.
But then you know that the learning never stops. You can just, keep in touch and interact with us on our Facebook page. It's facebook.com/Learn Extra with an X. And we are on Twitter. It's @Learn Extra. And that's how we roll, man.
Yeah,
Good.
and talking about rolling, hey, I like how Ashraf's know all these acronyms. He's just a bomb. You even know the TGIF. Wow.
I was telling him earlier that, hey, dude, it seems like this guy came out with guns blazing for this acronyms. But then it's a good thing.
It's a very good thing. Let's take the last question for Ashraf on the page.
Ashraf, we have a question here from Mukona Lepazi. Mukona is asking, with the loan amount of 240,000, does that include the interest on the loan? And when it says repayments on the loan, should it not be what is paid minus the interest expense?
No, sir. Your repayment on your loan, remember that the repayment is on the capital portion of the loan. So when you're looking at the loan repayment, you're only looking at the capital repayment of the loan. Why do I say that? Because I'll just draw your attention to something else so that you know what we're talking about. Can you see? The interest is a standalone item. So the interest is not included when you are doing your calculation for your for your financing activities. There, it's the capital portion of the loan that you are repaying. The interest is something that you've dealt with under your operating activities. You got it as a standalone item there, interest paid, and that's why you do not include the interest when you are doing the repayment of your loan. This loan is a financing activity as a standalone item. Okay, I hope that answers the question.
Okay. Let's move on.
Can we move on?
Yes.
Good. Thank you, guys. Okay, guys, coming back to our accounts. Remember, there are different ways in which the appropriation account can be handled. I'm going to show you a method whereby you only use the following items. It's your profit and loss, your net profit before taxation. You bring in your income tax, you bring in your ordinary share dividend, right? And the retained income amount that you get there is what you take back to your retained income account. Now, obviously, there are different methods. I'm emphasizing this here because I want you to draw your attention to the fact that this appropriation account, there's different ways in which you can handle it. The choice is entirely yours. This is just one way of doing it. Okay, so therefore, if we take this figure here now, and we take our 2,600,000, 2,600,000 minus What are we subtracting? 780,000, which was the income tax. 780,000 is equal to that. And then we subtract 169,600 minus 169,600. Obviously, that was your ordinary share dividends. Your answer is 128,400. The 128,400, this is important now. 128,400 is the amount that you are transferring. Watch the space here, guys. You're debiting your appropriation account with 128,400 and you're transferring it into your retained income account. Okay, coming back to our shares, the all-important part of our shares. Okay, let's do this here so we know exactly what we're doing. We started off with 1 million shares. You recall? We sold a further 400,000 shares and we repurchased 100 let's get that here. We repurchased 120,000 shares. Right. 120,000 shares were repurchased. Okay. And we said that 1,400,000 minus the 120,000, 1,400,000, 1, 2, 3, minus 120,000 is equal to something wrong there. Let me redo that. 1,400,000, 1, 2, 3, minus 120, 1, 2, 3. That gives me 1,280,000. These are the shares. Remember, the physical quantity of the shares. These are the number of shares that we have left over. Okay, now let's take that information. Very, very important. And I want you to see the link. And I want you to see, you can hear in my voice, I'm getting excited about this because I want you to understand it. Watch this here. Your ordinary share capital has a closing balance of 8,960,000. So that's the value of which shares? That's the value of these shares here, the 1,280,000 shares. Now, watch. So you take your 8,960,000, 8,960,123, divided by 1,280,123, and it gives you, voila, a value of 7 Rand. What is the 7 Rand? Grade 12s, the 7 Rand is the average price of your shares. I repeat, the average price of your shares. Now watch. If that's the average price of my shares, I wanted you to see the link. Watch. Here we're going to find the link now. So now I know that if these shares were sold at, the average price of the shares after we bought back shares was 7 Rand. Okay? Watch this here now. In my ordinary share capital account, I know that I sold some shares. The number of those shares was 400,000. The value, the physical quantity of shares was 400,000. I don't know the Rand value. But what I do know is the shares that I bought back. How many were they? 120,000. Therefore, I say 120, 1, 2, 3. That was the number of shares that I bought back. I know that in my ordinary share capital account, I only use my average price. Important. The entry in the ordinary share capital is at the average price because that is the price that goes into my ordinary share capital account. Multiply that by 7 and my answer is 840,000. So therefore, 840,000 is the bank component of what? Of the shares that I bought back. Okay. Now see, where am I going from and where is it leading to? So obviously now, if I have the 840,000 and I add let's add 8,960,000. 8,960,000 is equal to that minus, what was my opening balance? 6,360,000. 6,360,000, 6,360,000, and it gives me a figure of 3,440,000. 3,440,000. What is this here? Grade 12s. What is the 3,440,000? That is the value of the shares that we sold. Why? What's my double entry? When I sell shares, what's my double entry? A debit to bank. Why? I'm receiving money. The moolah is coming into my account. A debit to bank and a credit to ordinary share capital. So clearly you can see that that's the value of the shares that I sold. Remember what we said in our cash flow statement. We want the proceeds of the sale of shares. And there it is, 3,440,000. But that's not all we want. Remember, we also want to buy the buyback figure. What value of money left the firm, the company, for the buyback of shares? I've got one component already, the 840,000. Remember the 120,000 shares that we bought back? There it is, 840,000. Now, my information tells me that these shares that were repurchased, the 120,000 shares, were repurchased on the 28th of February from the estate of a shareholder who had died. The shares were repurchased at 2 Rand and, sorry, let me read that again. The shares were repurchased at 260 Rand above the average price. Have we calculated the average price? Certainly we have. And what was that? The average price was 7 Rand per share. So obviously, if you sold 120,000 shares above the average price, 2.60 Rand, let's do that calculation. So 120, 123 times 2.6, and my answer is 312,000. What is the 312,000? Watch the space. 312,000 is going to impact 312,000 Rand is going to impact on my retained income. Why? The average price of the share that we repurchased, the average price goes to ordinary share capital. There it is. And the price above the average price, the 2.60 Rand, which was per share, times 120,000 is the 312,000 Rand. That one there. So in other words, these shares were sold for how much? A simple maths calculation. Average price of 7 Rand. We paid 2.60 Rand above the average price. That means 9 Rand and 60 cents. Can you see what I'm talking about? All that I'm saying is average price was 7 Rand plus 2 Rand and 60 cents above the average price will give me the purchase price of those shares, which is an amount of 9 Rand and 60 cents. Okay, so these shares were purchased for how much? What did we buy it back at? We bought it back at 9 Rand and 60 cents. Let's do a test. 120,000 shares were repurchased, correct? In terms of my information, 120,000 shares times 9.6, because they were purchased, we calculated at 960 per share to give me a value of 1,152,000. Okay, so the total amount of money that is leaving the company, guys, grade 12s, your buyback of share would be 2 parts, the average price plus the price above the average price. So in other words, the 1,152,000 is the value of money that's leaving our company as a result of the shares that we bought back. Okay, now let's minus something from there. What are we going to subtract? Let's subtract either one of the two. Let us subtract the 840,000. So, minus 840, 1, 2, 3. 840,000, one more zero. 312,000. Did we see that figure before? Did we? Let's check. 312,000. Voila. The 312,000. So you can see that these two tie up. So once again, to recap, to put this very briefly to you, don't use any other fancy accounts. All that you use is the ordinary share capital account for the average price, and the price above the average price goes to your retained income. And the reason is very simple, because you have retained income on those shares that must come out of the retained income account. We've worked very hard on this question to make you understand it. Guys, you got to aim for the moon, because if you don't get there perchance, you're definitely going to be Mindset's shining stars.
Of course, and that's where we have to end it. Mindset is with Netherlands having 38 likes, but you can still vote because the competition is closing at 3:30, sorry, and today is the last day of the competition. The grand draw is happening at the 4 o'clock show, so guys, watch out for that one.
Sorry, just one more thing. Sorry, guys.
Yes.
Sorry to do this to you. Mindsetters, the other parts of the questions, please do it on your own, because the solutions are available, right?
Awesome.
So please do the rest of the question.
Indeed. It's been an awesome experience chilling with you guys, and of course the learning. Remember, the learning never stops. Keep in touch with us on our Facebook page.
Cool. Well, thank you guys, and that's how we end it. Thank you so much, Kato and
awesome
Mr. Ashraf.
Cheers.
Awesome. Peace.